Hi, it's Connie from Prosperity Finance. How are you? I hope your life and work and business all gone back to normal. Well, it's certainly for us, it's actually beyond our expectation. We got a flood of inquiries from the first home buyer and investors. I guess it's partially to do with the extremely low interest rate. Now we've seen some bank offer less than 2.5%. That's really, really low. I couldn't imagine 12 months ago. It's just ridiculous. But it's good. It's good for us. We can save money and we can pay off a loan quicker. Now, on the other hand, I think a lot of people has the expectation that there might be some bargains out there, so it's good time to buy. Now, I think probably the truth. However, in this video, I just really want to remind you that while you're busy with getting pre-approval to buy a home or investment property or upgrade home, just bear in mind a good planning is extremely important. You not only plan for this transaction, but also beyond this transaction. It's about what's your plan for the next couple of years. Now, in this video, I'm about to share a story. It's a true client case with you. With this client, many years ago, bought a rental property. Now, they were qualified with all the banks. They eventually went back to their own bank where their family home was mortgaged to. So two property are with the same bank. Now, because of this structure, when they sell the rental property early this year, they had no sale proceeds left in their hands. But in reality, they were going to use the sale proceeds to buy a business to help them to achieve their life goal. But it's really hard. They had to borrow because they had no money left from sale proceeds, and the banks make it really hard, right? Especially after COVID-19. So planning is extremely important. So let's have a look this client case. Obviously, I wouldn't use a real name for privacy reason, but it's important to understand the principle and where the mistake was made and the consequence, etc., and how we can improve if it was you. Okay, so firstly, let's have a look at this case. So they are a couple, married couple. They were on PAYE, so employee, very stable income. Last year they came to me, and at the time they had two property. One is a family home. It's worth about $1 million, and the loan against that is $350K. They also had a rental property. The value at the time was $850K, and the loan was $700K. As I mentioned earlier, they went back to ANZ. Both were mortgaged to ANZ. Now they came to me to buy a second rental property. Now I said to them, you definitely can based on your income and equity. But before you do that, I really recommend that you split the two property and the loans into two banks. There are two main reasons for that. Number one is the equity is always there, right? We can have a look at the equity level, but the equity is always there. But the bank also look at your servicing ability, and in fact, servicing ability is more important than equity. It's your ability to repay the loan. If you can't demonstrate you have that ability, it doesn't matter how much equity you have. At the end of the day, bank won't lend you money because you can't afford, right? Equity is really help protect the bank. In case you couldn't repay the loan, they can at least sell the property and recover the debt. But it's not the first way to exit. First way exit is to use your cash to repay over a number of years and eventually pay off the property. So carry your equity to a bank where you can borrow enough to buy a rental. So ANZ, they actually went to ANZ before to come to me, and they said I can't borrow enough from ANZ. I can only borrow 300K, 400K. I'm not going to buy a rental. So that's a problem because you went to the wrong bank. Even though your situation is the same, no matter which bank you go to, but because the bank policy are so different, you end up with different borrowing capacity or servicing ability. So that's number one. I recommend that take your property to another bank, carry your equity. Second reason is because the bank otherwise have full control over two property as opposed to just one. So let's firstly look at the first point about equity level. So as a home, we know the LVI is 80%. So if it's $1 million, then the equity, they can borrow up to 800K, right, against that property. Now they already have 350K, therefore the equity is 450K. Same for this property is rental, so we can only extend to 70%. So that value is 595K. They borrow 700K. It's actually negative 105K. Well, but it doesn't matter because overall you have 345K equity across two property. So you still have a positive equity overall. Therefore, you are able to split, right? So it's not a problem. And with 300K plus equity, it's easy to borrow $1 million subject to your servicing ability. So equity is fine, right? The second thing is about protection. Now, why I say that? Well, in your eyes, you probably think I only borrow 350K. If I sell the home or rental, I only need to pay the loan respectively. But in bank's eyes, it's actually not the case. Now, the bank look at the two property value and the loan together. In this case, they think you have 1.85 mil assets, property value, and you have 1.05, just over $1 million loan. When you sell one of the property, they're going to reassess your situation and see what is the remaining assets value and what is your income, how much can you assess. So they actually assess you on your way out because you have a remaining security, you have remaining loan. But if we split them, then you can just pay off that particular loan. So that's why I recommend that way. Unfortunately, this couple didn't take my advice. They just get busy, with life. They didn't do anything. They didn't buy rental. They didn't split. Nothing. Early this year, the husband unfortunately got redundant. So he had no income. And the wife is still employed, but her income was reduced a lot. At that point, they discussed they decided to buy a business. They just had enough with working for someone. So they want to buy a business and they couldn't decide which one. They were thinking about a laundry shop, lunch bar, cafe, and some other business opportunities. Anyway, before they made a decision to buy business, they firstly sold the rental property because they think whatever I buy, I need to have some cash. So they sold the rental property. Now, bear in mind, the rental is still with ANZ. So, before settlements, ANZ worked out that if they sell that rental property, even though the home, which is the remaining assets, still have $1 million value, which means you can borrow up to 800K, but the total income between husband and wife is they can only service 200K roughly, because the husband had no job and the wife income was reduced as well. As I said, they will reassess you on your way out. So as a result of that, the bank in this case said, unfortunately, you have to give me everything you sold for, except real estate agent commission and legal fee. So they had to pay down their loan from total 1.05 mil to roughly around 200K. They've repaid over 800K, almost all sale proceeds. Well, so the client ended up with no cash in hands to buy any business. That's not their plan. If they knew that they couldn't keep anything, they probably won't sell. Now, they can still buy a business, but now you had to finance the business purchase, right? Because you have no cash. Well, luckily they still have equity up to 800K. They only have 200K loan. So, well, they can borrow roughly 550K to purchase the business. But the bank also look at a lot of other things when you buy a business, such as the lease term, such as the financials, forecast, business plan. And then especially under the COVID-19 environment, some industry are really sensitive, like hospitality industry. It's a slow recovery, etc. So the bank really scrutinize the business they want to buy. So after a few try, they couldn't get a finance. However, if they had taken my advice, let's say they only, let's do another pen. Let's say they took my advice and they refinance the rental, but add 450K against home, so it's borrowed to the maximum equity. The home has 800K loan, and then the rental minus 450K only had 250K loan. So when they sell the rental, let's say the rental is with Bank B, then they only need to repay 250K, so they roughly have about 600K in hands, and they can do whatever they like. They can use the money to repay home, but they can also use the money to buy business if they can't get a finance. But in this case, they had no choice. They just had to borrow. So it's a sad story, but it's a good example that I want to share with you, because they are not the only customer had the wrong structure. I see this kind of structure from time to time. It's really important that you not only get the loan amount you need, but also plan ahead. Have a good structure is extremely important to help you go along the way. So I hope you find it useful. I really appreciate your time. It's a bit long this time, but it's a really important lesson to learn. If you find it useful, please subscribe to our YouTube channel or share my content with your family and friends, and they can get benefit from that as well. Thank you so much for watching. I'll see you next time. Bye bye.